Walmart is a key stock in the market that oftentimes forecasts the state of the consumer, and their forward estimates for their own revenues and earnings and stuff like that, their guidance, as you would say, actually came out really disappointing to the market. And this, on top of some Ukraine and Russia jitters that are going on right now, has the market down here a little bit this morning. S&P 500 down 0.75, NASDAQ down 0.9, so a little bit of a pullback. We also see the Dow Jones down 1.1% here this morning. We're going to also talk about the dollar. We'll take a look at gold as well, in all of this in today's video. Let's jump in. As we get started, if you could do me a big favor and just hit the thumbs up button on the video, I greatly appreciate it. So the stock market has been sitting right around all-time highs here, and now starting to see a little bit of a pullback. I personally think and have been saying on my channel that the S&P 500 has plenty of room to pull back and still be in the context of a very strong upwards bull market. But we have a lot of things to at least consider right now in the markets, and I would not be surprised if this pullback does turn into, or this down day turns into a proper pullback, and maybe we see a 5% pullback or something on the S&P 500. This is both just from a valuation standpoint, the market is very frothy, very expensive right now, but also because you have some uncertainties going on with Russia and Ukraine, and again, some economic data that's come in a little bit weaker than expected recently. You can also see that on the Edgefinder's top setups algorithm, there is no current US indices on the bullish side of things. In fact, I believe, well, there was, it's not there anymore, but the Russell at one point was starting to get a bearish reading here on the Edgefinder yesterday. So, not really getting any super bullish signals on the Edgefinder. So that's going to keep me a little bit on pause. But why might that be? Well, when we take a look at the US economic heat map, I've been pointing this out a lot recently, but you've had a lot of these things shifting red. And even for traders who use the Edgefinder as just kind of a window, if you will, to fundamentals and don't necessarily make all of their decisions based on the macro, this can still show you maybe a reason why traders and investors are a bit cautious about the US stock market right now. There is, again, very high expectations for US stocks to deliver massive earnings, and that has been the theme for a while, and they've been delivering. But with some of this data starting to show some signs of not necessarily weakening, but at least slowing down compared to analyst forecasts, this is starting to look like, okay, maybe growth this year is still going to be good, but maybe not as incredible as 23 and 24 were for US stocks. So if not stocks on the bullish side, where am I looking for opportunities? Well, I've been talking about it a lot, but I'm still in the silver trade. This has actually been a setup on the Edgefinder for the same reasons we just discussed. If we actually remove neutral readings, we can simplify our view here. You can see gold and silver both getting bullish and very bullish readings respectively on the Edgefinder for the same reason we just discussed with that economic heat map. The US economic heat map showing some weakness means that the dollar might be a little bit cool for a little bit, which could be very good for metals. That is part of the reason why I am currently sitting in bullish positions in silver and interested in buying pullbacks on gold. We also have a number of reasons here recently to be a little bit uncertain about what's happening geopolitically. We know Russia and Ukraine, there were supposed to be some discussions that actually got canceled. The meeting got canceled here this morning, which maybe, Chandler, you can find an article to show on the screen so that we can see what that was all about. But basically, there was supposed to be a big meeting between kind of all the counterparties, and they backed out last second. So kind of interesting just to see there was an important envoy or something from the US that was going to lead the discussions there. But regardless, we do see gold and silver still driving higher despite so many critics calling for a bearish reversal in gold for so long here. It has been just a perpetual upward trend. And for me personally, I am actually looking to buy dips on gold. Despite it already having a really strong run up, I'm interested in possibly taking some long positions as long as the Edgefinder continues to give me that bullish reading. I like the setup quite a bit. That's telling me that most of my indicators here, things like inflation data, retail sales, PMI numbers, GDP numbers, the trends, seasonality, retail positioning, right? The crowd sentiment, the commitment of traders data, institutional positioning. Most of these things, not all of them, but most of these things are pointing towards continued bullishness. And specifically, I noticed institutional money had done some buying here recently on silver, which is another reason why I'm bullish on this one. Pulling up the commitment of traders data, we can scroll down to the latest buys and sells according to the CFTC's commitment of traders report. What I want to show you here is that silver specifically saw a mostly bullish tilt here recently. We saw a slight decrease in longs, slight decrease in shorts, but the net overall still favors heavily the long side. So institutional money still seems to be very parked on the long side of silver, which gives me confirmation, not certainty, but confirmation of maintaining a bullish position myself on silver as long as momentum continues to favor the bulls, right? We've got this nice upward trend. I've got my stop loss locked in profit. And if we can get a strong closure here today, what I'm going to look to do is trail that stop loss further in and just lock in more of a profit on silver. In case we do get a large scale reversal and breakdown of momentum, I do want to continue to be locking in profits on this through a trailing stop, but I do also want to give this chart room to have these kind of intraday kind of squiggles and lines and moves all over while still allowing it to play out the overall thematic momentum that I think can continue for 2025. We spoke briefly about the dollar here, which I think is decisively now in a bearish trend. We are starting to see some pretty strong reversals here. We had a really strong upward trend for some time on the dollar index, and now starting to see that momentum fade the other direction. With this level of support yet again kind of falling short here when bulls are, well, I guess it's too soon to say, but we've seen multiple instances where bulls have established a level of support and then bears break it. So I'm curious if we're breaking that or in the context of breaking that currently at the time of recording this, or if we can see bulls try and step in and actually break this out. But my path of least resistance for me, again, the data has been shifting in favor of the bears. We've been talking about that on the channel. That is why I'm personally long silver and have been talking about it. So I do think that that actually has potential to continue. And if it doesn't, and I'm wrong about that, we'll reverse the trade and I'll get out of my positioning. Another thing I've been really correct about here recently has been the Japanese yen. I'm very bullish in the Japanese yen and currently have and continue to hold a short position on CHF JPY. That's the Swiss franc against the Japanese yen. This is a trade that I shared inside of our VIP signals group. Same thing with the silver trade. All of my trades get shared to our members inside of the Discord. If that's something that you're interested in joining, there will be a link in the description down below to where you can sign up to get those signals sent directly to your phone. I know a lot of people have kind of a stigma around signal services, but I do want to clarify that when I say a signal service, you get to see every trade I'm taking with entry, exit, full breakdown behind why the trade is taken, and most importantly, it's on a real live US regulated brokerage. So it's not nonsense and it's not, just random demo profits being flashed. These are real trades that I'm taking on my personal capital. I don't guarantee you're going to make a bunch of money or anything like that from what I'm doing, but if you'd like to learn by looking over my shoulder while I take trades, you can actually do that inside of our VIP signal service. The link is in the description down below, and if you have any questions, please chat with us using the first link in the description. Today on the live stream, I had a great conversation about correlations with Miko and Marco, and I encourage you to take a few minutes to listen to this portion and this rewind of today's show. Remember, you can also find us live Monday through Friday on the live stream each morning. Best way to find us is to hit the subscribe button, turn on the notification bell next to it so that you can see us when we go live and get notified each time we do. Euro pound is a really interesting currency pair. It actually moves on a pip basis very little. It is one of my favorite currency pairs for a dollar cost averaging approach, simply because it moves a heck of a lot less than like yen pairs, things like that. Like if I'm going to dollar cost average on a currency pair, something like euro pound is great because it doesn't move like that much. So if we take a look at this move here, that's 251 pips. This is a daily chart. Like that's not very big. So people who are playing with correlation between the two may look to sell a little, sell a little, sell a little, sell a little. When the correlation comes back in, close it out. Right? That's a very common, Forex hedge fund kind of approach, correlations, but you can do it with everything. And TradingView is so cool because you can actually go Coke versus Pepsi. Check this out. This is a fun, you can do this in everything, by the way. You can do basically, here's Coke versus Pepsi. These are two companies that do the same thing for the most part. In this, though, it's showing you recently Coca-Cola has actually performed a lot better than Pepsi. And the way to read it when it's going down is the opposite. Pepsi's winning. Another one that we love talking about on the show is the gold to silver ratio. This is another correlation. Really, really fun. And this one's fun from a long-term basis too. I've told you guys in the past and the audience as well that I like buying physical gold and silver for I don't have a ton of it, but I have a little bit of it. And the stackers of the world, which is what they're called, the people who buy and hold physical metal, they always reference the gold silver ratio. When this thing gets extreme on a long-term mean reverting basis, it typically sways back and forth. What that's telling you is that when this chart gets really high, silver's the better value, because that's saying you need a lot more silver to buy an ounce of gold. Or to flip that around, 1 ounce of gold would buy you a ton of silver if you were to trade them in. A lot of physical dealers will actually let you trade the two with them. So, you know, when it flips the other way, the idea is to, you know, the concept is gold is cheap and silver is expensive. Typically, we see that during big metal market booms. Like we saw a huge drop in this ratio post-pandemic when everybody was buying metals, silver actually outperformed. So correlation is fascinating. It is a very, very powerful thing, understanding and isolating correlations in markets. And I would encourage everybody to do their research on correlations to know a little bit more about them. Many traders don't know this, but a lot of trading profitability is dependent on you using the correct brokerage when you're trading. Remember that your trading costs are an input to your trading results. So what I mean by that is trading costs such as commissions and spreads and swaps and overnight holding things. All of that plays into your final results as a trader. And another huge thing that I cannot emphasize enough is you making a deposit into a brokerage account can earn you some significant trading perks if you use the right offer links. In the description down below, we have put together a collection of some of our partnered brokers that offer welcome bonuses when you make a deposit, free stock shares when you sign up, and access to some of our products for free. On our website, a1trading.com/brokers, that's a1trading.com/brokers, you'll see a list of free offers that you as a client to these brokers can get upon sign up and deposit. Do not make the rookie mistake of just signing up for any brokerage and not using a specific offer link. If you use our referral links, you'll get something out of it, and you'll also be supporting our work here on this YouTube channel. Thank you for watching. We'll see you next time.